Yo, what's up, guys? Back with another vid. This is part two of my series where I'm going through all the ICT concepts you need to know to understand ICT. Today we'll be looking at manipulation and some stuff within it to actually know what manipulation is, and then we're gonna look at some examples on the chart. So let's get into it. All right, boys. First step of knowing what manipulation is liquidity. So, liquidity is a large volume of sell stops or buy stops that rest above highs and below lows of the candlesticks. Liquidity is the backbone of price action, and it's what draws price to where it wants to go. So, as you can see in this picture, this is a visual representation of what liquidity is. So, basically, this right here, how I was talking about its buy stops and sell stops, this is where, say, a lot of people entered short, and there's a lot of, I guess you could say, money that is here, and the market wants to go take that. And then see here, we have a lot of buy stops. So sell stops, buy stops are here. They start resting here, and then price wants to drive down and take that. And you can see price takes this, and then we make more liquidity. Liquidity takes it, doesn't take it, and then we got more liquidity here. That's kind of a visual representation of what it is. And here's it in a different example. We have liquidity right here, and then price goes up to take it, and then price on the move that price went to go take it, it made liquidity, which were buy stops, and then price went to go take that. So liquidity is what basically drives the market to go where it wants to go. All right, next thing with the manipulation is highs and lows. So highs are basically just the high of a candle, as you can see right here. It's the top wick of it, and the low is the bottom wick of it. So in the same range, see, it's just how we visually mark it out in the chart. So liquidity, liquidity, see, here, and it's how we just visually see it and know that price either is drawing to it or taking it. Highs and lows can get ran through and taken / respected, depending on what the real draw is or where the market wants to go. So I know this all sounds very loose right now, but I'm gonna tighten it up in a sec. So you just gotta remember highs, lows, and highs and lows are just liquidity, and that's how we mark them out. So highs are always gonna be higher, obviously, and then lows are gonna be lower. And we take low, take high, didn't take this high, we took this low, took this low. But I'm going to show you that with that happening, there's two things that can happen to highs and lows. They can get taken, which means we go take this, so we went lower than this low, so we took it, and we go higher, and we don't displace through it. Right here, you can see we didn't take this high, and we displaced through it. And you can see we didn't take this low, we displaced through it. And it's vice versa for highs and lows. So I'm gonna change the terms here because I want to start talking about manipulation. So manipulation is respected, or taken. So this was manipulated. This was manipulated because we went lower, and this was manipulated because we started going higher. And then displaced means ran through or it means ran through. So this one was ran through, this low was ran through, and yeah, that's all that was ran through in this range. So it's when we don't manipulate it and we keep going through it to whoever price wants to draw. Buy side liquidity and sell side liquidity. So this is how we kind of, we don't call them highs and lows, we call them buy side liquidity and sell side liquidity. So we're changing the terms up again. Go back to the liquidity. So this is sell side liquidity, and because you want to sell to get there, and this is buy side liquidity because we want to go higher and buy to get to it. Now we're going to look at examples of sell side and buy side liquidity getting ran through or manipulated. So sell side liquidity, like we said, this is a low. It's a low, but I'm just calling it sell side liquidity, and it gets ran through. We don't stop here and go higher. This is, oh wait, this is sell side liquidity getting manipulated. So see the low right here, we come down, make a lower low, and go higher. That's how you know it got manipulated. And then buy side liquidity getting displaced, or displaced, which is ran through, and we run through it and we don't take it. We don't stop here and then go lower. And this is buy side liquidity getting manipulated. We come up, take the high, buy side liquidity, and we don't go higher, and we start displacing lower to go take sell side liquidity, which is right here, a low. That's pretty much all you need to understand about this. Now I'm going to go into some examples in the chart, and we're going to break it down step by step. All right, so here's an example of pretty much everything that we've talked about in the previous sectors. So we have liquidity up here. This got manipulated, and we made a higher high, and we didn't displace through it. So that's buy side liquidity getting manipulated. Oh shoot, I made this sell side liquidity. Let's make that buy side. Okay. Yep. And then we displace, and we displace through this liquidity right here. So we're displacing through it, and then boom, we have sell side liquidity resting here within a fair value gap, which I made a fair value gap video a couple weeks ago, a lot of depth, and I should watch it. But in a fair value gap with manipulation, so this is a high chance of reversal. So we manipulate sell side liquidity, and we're not going lower. So where do you think prices want to go? To the buy side liquidity we made on the move to take the buy side liquidity. So now this makes a pretty good buy sell model. Market maker model. So I'm gonna just draw it out. This might look a little bit crazy. Just trust the process, brother. Trust the process. I'm gonna give you a little more sauce right here. So buy side of the curve, take liquidity. Now we displace sell side of the curve, take sell side liquidity. So, now this is the buy side of the curve. So two models. Oh, let me bring my pen out. Okay, I can't do the pen, but hopefully you get the idea. I'm gonna show another example right here. All right, here's an identical representation of what I was talking about earlier. I'll pop it up on the screen right here. But before I tell you how to look at this, I want you to decide. So I'm gonna give you a minute. All right. So one thing, fair value gap. Bam. Liquidity. Let me go to a lower time frame. Bam. It's buy sell liquidity. So we got a lot of orders resting here. And now that we've taken this, on this move to go take that, look what we have here. We have sell side liquidity just ready to be taken. So we're in a rally gap. We've taken internal liquidity, buy side liquidity, and we have started to displace. We've ran through rally gaps and all that jazz. And now, where do we want to go? Where do you think price wants to go? To sell side liquidity. And then, who knows what happens after that. But, it's kind of is relative. It's always an exchange of buy side liquidity, sell side liquidity, sell side liquidity, buy side liquidity, and it's always constant. And it's always what's driving price to wherever it wants to go. I'm gonna give one more example, and I'm gonna let you decide again. All right. I'll give you time to think. Okay, so we have buy side liquidity getting manipulated / taken. All right, then price doesn't want to go lower, so look what we do again. We manipulate buy side liquidity. So this is what we call internal manipulation. So it's manipulation within a model. So we resist to go lower. So we would really want to take probably these lows right here. So look at this low. And sometimes we don't even take the low. Sometimes we just, price wants to not be efficient and go where it wants to go. So this is just theory, okay? But then we got buy side liquidity here again. And we're kind of starting to displace the rally gap. Change of the state, I haven't talked about that, but we haven't really displaced through it. And we got liquidity here. So let's see what happens. Siding. Why is it taking so long? Okay. Well, price actually ends up respecting this, it looks like. And why is my fucking... Oh my god. You kidding me? Okay. Alright, sorry about that. But this is last example. So I kind of grouped these highs together because they're pretty close, so we can call that like relative highs, relative equal highs, and you can just pretty much group these together. But price come down and it doesn't want to go lower. It doesn't want to go lower, and it's manipulating it and respecting it, I guess you could say. And then price comes up, manipulates both these highs, and now we're starting to see displacement through no for value gap, but we can see this change in the state of delivery right here, which would indicate sell-off. And then we go take liquidity and we run through it, and we're probably gonna go take this low to probably complete this sell model. So, two things you need to remember: buy side liquidity, sell side liquidity, and the difference between manipulation and displacement. The liquidity moves the market, boys. It's like the big daddy. It's like the dude who calls the shots, okay? So I hope this video helps you. Sorry if it was loose or informal, but I try to make my content as raw as possible and truthful. But I hope you guys have a great day, and God bless.